Hello, this is Jordan, and this video is being recorded on Thursday, November 18, 2021. Thank you so much for joining me today. Please like, comment, and subscribe. And in today's video, I am going to cover two updated analogs and what they say about gold's medium term and intermediate term outlook. So I only have two images, two analogs for this video, and this is what I call the correction analog. It's looking at historical corrections in gold bull markets and placing them on the scale as if they were applied to gold's peak in August 2020. So the blue line is six major corrections. That's the average of six major corrections. And that includes all bull market corrections. It basically includes almost everything except for 80 to 82 and 2011 to 2015. The red is the average of the three worst, and that includes 75 to 76. And from a historical perspective, and looking at these analogs, the recent strength in gold is significant because it kept gold on the average path. If you go back a couple weeks or a month, gold was trading in between both, and it wasn't clear which one it was going to follow. And at this point, there's a more clarity that it's following the path of the average. Now, from this point, what the blue line basically did is, well, let's go back. During the correction, there was an initial rally, an initial rebound, then the correction continued, and then later the market rallied up to that first corrective peak. It pulled back, and then after that pullback, that's when it really started to get going. And so when did the blue line break above the corrective high? It was actually at the very beginning of March 2022, if we're looking at the same scale. So apply that to the current market. This is the weekly chart, so it's just above, this is weekly data, so it's just above 1900. So again, we could focus on the weekly and monthly for 1900. But, gold rallied up to that point, it pulled back, and now gold is trying to rally up to 1900 again. Maybe it'll reach it in the next couple days or week or so. And then after it pulls back from that point, it's after that pullback when gold starts to turn up. That's when it can really get going. You'll break above 1900, begin a serious move. And so we see again, using the history, it would say the very beginning of March next year is when gold is going to break 1900, move above it for good. Okay, so this chart, this is the best historical analog if we're taking a bird's eye view. And it basically, it compares, or it puts gold, it puts the current gold market along with the 90s and the 2000s. And that's because there was a mega bear market in gold from 96 to 99 or 2001. There's a double bottom, so depending on how you measure it, 2011 to 2015 was very, very similar. Another reason, aside from the time and the devastation, is gold. If we look at the charts, gold really didn't get going until 2001. And this time around, gold had that bottom in 2016, didn't really get going until 2018 for the most part. And again, 99 to 2001, you had the start of rate hikes, and then you had the rate cut. 2016 to 2018, start of rate hikes, December 2015, 2018. The Fed shifted policy. They cut rates in 2019. So a lot of similarities between the two. And if you look at the image here, they fit really, really well. And so, if we're looking at the past, based on this analog, we're in the middle of the 04 to 05 correction, which was a very bullish consolidation for gold at the time. And gold corrected about 14%. I think it lasted 17 months or so, depending on when gold started its exact ascent. And so based on this analog, gold really started its ascent again in March 2022. So we have these two things pointing to the same time. And I several weeks ago, before gold had the big move higher, I was thinking, the correction we've had, it's a combination of 04 to 05, which was really bullish, in 75 to 76. But at this point, the correction is more, it's looking not, I wouldn't say it's identical to 0405, but it's somewhat close to, it's definitely much closer to that. And, technically gold has a very, very bullish setup. I mean, when gold breaks to a new all-time high, it is really going to explode. And so the precursor to that is going to be breaking above 1900 with a monthly close. So I don't think, I mean, looking at this analog, I don't think that it's that far off from what could happen. Maybe the timing's off a little bit, but when gold it makes a new all-time high, gold is going to explode. It's the long-term cup and handle. It's just super bullish. I can't stress that enough. And so I also like this analog. And I don't think it's too far off from what's really possible for gold. And we're getting there. We just, at this point, we got to rally up to 1900. Let's pull back, and that's going to be really the last chance, because when gold does a monthly close above 1900, it's really going to start to gain momentum and really going to accelerate to the upside. That's all for this video. Let me know in the comments what you think. If you're new, go to TheDailyGold.com. You can follow all my work there. Opt in for a great free report. Consider subscribing to my premium newsletter. Only $149 for 6 months. And I focus on market timing and stock selection in the juniors. And as we move closer to a huge breakout in gold, it's going to be a lot more focusing on the juniors and the companies that could do 5x, 7x, and 10x, because that's what we're looking for. When gold makes this historic breakout move, we're not just looking for doubles and triples. We have to capitalize on that as investors and hit grand slams and hit home runs. No singles or doubles in this business. This is the time to get ready to really cash in over the next couple of years. Thank you for listening. Again, leave a comment. Let me know what you think, and I'll talk to you guys in the next video.